Hello, my name's Tim Gregory. I'm from Vermeer Investment Management in the UK. Hope everyone is managing to stay safe and that their friends and family are also doing okay at this extraordinarily challenging time. Today, I'm going to focus on the upcoming US results season. This comes at a really interesting time for the market as stocks have continued to power higher, helped by central bank policies to create lots of liquidity in the financial system, helping both bonds and equities to recover very strongly from the lows seen towards the end of March. Alongside that, we have seen also tremendous support from government policy to help families get through this difficult time and bridge the economy, providing support to retail and consumer spending. And also, we have seen the beginning of a reopening of the economy. Now, worrisomely, of course, we've seen in recent weeks a very high level of new cases of COVID-19 and something of a retracement of the opening of the economy that we saw in the middle of June. Now, as it turns out, this coincides with the results season, and it's going to present a challenge for companies in deciding how they set out the landscape going forward. What we know is 3 months ago, when they reported results, things were just beginning to evolve in terms of how the pandemic was playing out. And we were just going in to lockdowns that lasted for, in many cases, a couple of months before the reopening began. And so caution was very much the watchword for many companies as they were giving statements to their prospects going forward. Now, we know that the second quarter has turned out to be significantly better than was feared by many companies at the time that they reported their earnings 1 quarter ago. So they will be reporting, I think, in many cases, much better results than was originally expected. But we still think it will be difficult for companies to give clear-cut guidance as to the future prospects of their company as we see a slowdown once again, and uncertainty over the speed at which the economy can normalise. Now, whilst government policy remains in place, which we expect it to do through to the election to support the economy, that will help. But we really need to see a real reopening of the economy and a full normalisation before companies are able to give much clearer guidance as to their future prospects. We don't expect many companies to actually give clear guidance. We expect companies to say that they are in a financially strong position. Many companies were able to refinance their balance sheets and improve their cash positions to get through this pandemic, however long it lasts. And that will stand them in good stead. As a result of that, we see a balance between investing in those companies that continue to benefit from the digital transformation and those companies who ultimately will benefit from a reopening of the economy and hopefully a more normalisation of the world that we live in. For now, central banks, we believe, will continue to support markets with very, very strong liquidity, and this will help. But we see a very challenged environment for many companies going forward as they have to spend higher levels of costs to keep their businesses open at the same time as seeing a difficult demand outlook. And this will continue to frame markets as we go forward. Thanks very much for your time.